Howdy, my name is Dustin Lee. I'm the founding attorney here at Ascend Legal Solutions, and today we're going to talk about the difference between a DBA, a sole proprietorship, an LLC, and an S Corp. This is a question that I get all the time. On a near daily basis, I hear this stuff. So I thought it might be a good opportunity to have a chat. Welcome to my very first YouTube video. If you like the way I do things, go ahead and leave a comment. If there's anything you want me to talk about in future videos, please leave a comment for that as well. So let's dig right in. First, what's a sole proprietorship? Well, a sole proprietorship, basically, you are the business. It's your own personal name you're out there doing business with. There's not really any startup cost or setup fees. You don't have any legal work involved with it. You're just out there doing business. Now, obviously, this is a risky one because you personally are liable for anything that happens. Any damages you cause, any injuries you cause, any complaints that your customer may have. So anything that goes wrong with the business could result in your personal liability. And that could have very negative consequences depending on what state you live in. You could have your bank accounts garnished. You could have non-exempt assets taken away from you. You potentially would be in a situation where you may need to file bankruptcy. But as far as the benefits go, it's the cheapest to set up, cheapest to start, because there's really not any legal work involved. The next thing we'll talk about is your DBA, doing business as. In Texas, we call it an assumed name, but everybody really just goes by DBA. Now, you can have a DBA as a sole proprietorship, or you can have a DBA as a business entity. So it works for both. First, we'll just talk about having the DBA as a sole proprietorship. So this is still you out there doing business on your own, but instead of using your own name, now you've got a DBA name. You've registered with your county or your state, and you've got a name that you're doing business at. It makes it look more professional, and it's very, very cheap and easy to do. It's very, very easy to set up. It's common for branding, but it doesn't change your obligations. It doesn't change your legal structure, and it doesn't protect your assets. The other thing that you need to keep in mind, it depends on where you live and where you're doing business, but your DBA or your assumed name certificate, it may expire. You may have to renew that. So pay attention to those rules and put it on your calendar to make sure that that gets renewed in time so that you don't lose your DBA. Next, we're going to talk about the LLC. Now, there's a bunch of different entity types out there. Limited partnership, LLC, which is a limited liability company, or a corporation. Most often in Texas and in most other states, people are using the LLC because it provides the most flexibility in operation and in management. Now, you'll want to talk to an attorney in your state to see what are the advantages or disadvantages of having an LLC versus, say, a corporation. But just in general, you're probably going to be going with an LLC. So the LLC, this is where you actually get your liability protection. There's a liability shield in place with the LLC, and that means that if something goes wrong with a business deal, somebody gets hurt, property gets damaged, somebody says that you owe money, in that case, if you have maintained the LLC properly, if you have followed your corporate formalities, if you've done the things that you're supposed to do with operating your LLC in accordance with the laws of your state, then you ought to be fine as far as your liability protection is concerned. Again, talk to a local lawyer to see what you need to do to maintain that liability protection with your LLC. But that's the purpose of the LLC. Obviously, the LLC has got some expense and some startup costs. Now, if you're a single member, it's probably going to be simpler and less expensive and less time consuming. Now, if you're multiple members or multiple owners, it's going to be a lot more complex. How does the tax treatment work? Well, for any tax treatment, you're going to want to talk to your CPA. That's the number one thing I tell people whenever you set up a business. Always find a qualified CPA, especially one that knows whatever your industry is. And they can give you great tax advice about how to structure things as far as the tax treatment of your business. They'll also be able to give you advice about expenses and what things that you can write off. So it's always really important for you to build a strong team around you, and a CPA is one component of that. The CPA will be able to tell you a little bit more about the tax treatment, but the main thing that you're going to be looking at as a single owner or single member LLC is it's going to be disregarded as far as the tax treatment goes. So that means that everything is going to pass through. You're not going to be paying double income tax, and everything is going to go onto your personal tax return. And then whereas if you've got a multiple owner or multi-member LLC, If you're married, you can actually elect one way or the other to be taxed as a partnership or disregarded. Or if you're not married, then you're going to be taxed as a partnership. And again, chat with the CPA about what that means. But essentially, in all these tax treatments, everything is going to flow through to your personal tax returns, and you are not going to be double taxed on the income of the business. Overall, LLCs are far superior to your sole prop or your DBA for liability protection purposes. Now, the last thing that we're going to chat about is S Corp. What is an S Corp? Well, to understand that, you have to talk a little bit about what is a corporation. Well, a corporation is another older entity type that a lot of folks used to use. And a corporation, by default, is going to be a double taxation situation. So if the entity makes some money, the entity is going to file taxes as a separate tax return. The entity is going to pay income tax on that money. And then when they distribute the money to the owners then are also going to pay tax on that. So to avoid that, there is an S Corp election that you can use for pass-through tax treatment for a corporation. But what a lot of folks get confused on is that tax treatment can also be utilized for an LLC. So like we talked about before, your LLC may be disregarded or it may be treated as a partnership, but you can actually register it as an S Corp. And the S Corp is going to be also a pass-through tax treatment where you're not getting double taxed. But the big difference is the S Corp tax treatment is going to allow you to avoid that self-employment tax. You will eventually reach a break point where that S Corp tax treatment is going to save you more money versus paying self-employment tax as a disregarded entity. And your accountant is going to be able to give you advice about where that break point is, and then also about what the next steps are to change that. And so at the end of the day, what we've learned is it's actually not a separate entity type. It's a tax election that you can make as an LLC or as a corporation. So I hope this is all really helpful information for you to help you understand the differences between a sole proprietorship, the DBA, the LLC, both single owner and multiple owner, and then the S Corp tax election. And if you have any additional questions, you should contact an attorney in your jurisdiction. And I hope you liked the video. Again, my first video. So if you have any comments about how we're doing things or topics you'd like to see, please feel free to leave a comment below. Thanks, y'all.